tricky. Let's take a look at this question. Fast Chip Industries is a C Corp. How does Fast Chip Inc. treat net capital loss for federal income tax purposes? So on the exam, they cover a lot how the corporation treat capital losses. That's very important. Well, it's something you have to know. It's something you have to memorize. If we have capital losses, what can we do with capital losses? We can offset capital losses against capital gains. What if we have excess capital losses? That's fine. We can carry it back 3 years and we can carry it forward 5 years. So you have to memorize. So this is a memorize. And you could see this question on the exam itself. Okay? Now, here's where students have a misunderstanding about this capital loss. Maybe I should keep it for the next question. No, it's okay. I'll explain it now. Some students, they know a little bit about capital losses, so they don't have the full picture. They would say it's deductible in full from the corporation ordinary income. So simply put, some students, they say, well, guess what? Ordinary income. Here's what you know. You need to know that ordinary income and capital gain are treated the same for corporation. So be careful for corporation and specifically for C corporation, whether you have ordinary income or capital gain, they're taxed at the same rate. Okay, which is different than individual. Okay, so when the students think, well, ordinary income and capital gain, they're both taxed at the same rate, well, guess what? I can deduct the capital losses against ordinary income. That's not true. Although they are taxed at the same rate, capital losses cannot offset ordinary income. That's what they cannot do. Okay, so they are taxed at the same rate, but they cannot deduct it. Also, some students will choose A, and I'm going to tell you why you will choose A and why it's wrong. And you have to be very careful. Deducted from the corporation ordinary income only to the extent of $3,000 per year. That is a true statement against ordinary income if we are talking about individual. If we're talking about a person, yes. For a corporation, that's not the case. For the corporation, you can take your losses, capital losses, offset capital gains, anything left, you can carry it back 3 years or carry it forward 5 years. Carry it forward 15 years is wrong. That's why this question is a little bit tricky. It's something that you have to memorize and understand, because now you have to kind of differentiate. They expect you to differentiate how capital losses are treated for personal as well as corporation. So you have to know the difference between the two.
Want to see more CPA exam multiple choice questions solved step by step? At farhatlectures.com, you will get hundreds of video solved MCQs step by step, including previously released AICPA questions, previously released AICPA simulation, in-depth lectures and resources to prepare for the CPA exam, AI tools that's going to help you study smarter, not harder, CPA exam podcast lessons where you can learn on the go. And also you will get the personal guidance of support of Farhat and his team. If you are serious about passing the CPA exam, this is your next step. Visit the website farhatlectures.com, start your free trial, and I hope to see you on the website.